Hi there, I'm Suk Day. I'm a chartered accountant and an MBA. Questions on ifrs5 frequently appear in final professional accounting examinations. They test the student's understanding and the application of the recognition, measurement, and presentation principles of business, held for sale, and discontinued operations in group financial statements. So, what are the objectives of ifrs 5? ifrs 5 applies to entities which decide to sell one or more of its business units or operating segments in an accounting period. A business unit is a cash-generating unit which generates its own revenue and cost and has its own asset base. It is very similar to an investment center in management accounting. The reasons for the disposal of a business is varied. It could be it's loss-making or the entity has decided it does not fit with the entity's strategy for future growth. Further, the classification of a business unit as a business held for sale in the group balance sheet could give rise to profit or loss from discontinued operations in the group income statement. So the objectives of ifrs 5 is to set out the principles for recognition, measurement, and presentation of businesses held for sale and discontinued operations. In our tutorial approach or plan, we're going to first list the recognition criteria for businesses held for sale. We'll then consider the recognition criteria for discontinued operations. We'll then review the presentation principles of business held for sale and discontinued operations in group financial statements. And finally, we will look at the measurement principles of business held for sale in group accounts. And at the end, we will then look at or discuss a typical examination question. We'll now look at the recognition criteria of business held for sale in group balance sheet. Businesses are classified as held for sale if its carrying amount will be settled principally through a sale rather than through continuing use, and the following criteria are met. The business must be a separate major line of business available for immediate sale in its present condition. Now the interpretation of what is meant by separate major line of business is an area of judgment, and ifrs 5 does not provide any guidance on its interpretation. Management is committed to the plan to sell the business, and an active program to locate a buyer and complete the plan must have been initiated. The disposal group must be actively marketed for sale at a price that is reasonable in relation to its current fair value. Shareholders and regulatory approval is highly probable, and the plan is unlikely to be significantly changed or withdrawn. And finally, the sale is expected to be completed within 12 months of the balance sheet date. We'll also look at now the recognition criteria for discontinued operations classification in the income statement. The division in the group income statement between continuous and discontinued operations can provide useful information to users. A discontinued operation is either a component of the group's business that represents a separate major line of business or geographical area of operation that has been sold or abandoned, or meets the criteria to be classified as business held for sale, or a business acquired solely for the purpose of selling it. We'll look again in our ifrs 5 at what is meant by a separate major line of business, and we'll use an example, Tesco, which describes itself as an international grocer and evaluates its performance based on 3 geographical trading segments: UK and the Republic of Ireland, Central Europe, and Asia. Within each segment, there are separate country trading operations. Example, in the Central European segment consists of Slovakia, Slovenia, and Poland. When Tesco plc sold off its Asian segment, which consists of Thailand and Malaysia, and the Polish operations, part of the European segment, in 2020, it classified all 3 as discontinued operations. If we look at the analysis of Tesco's annual revenue in 2021, which is 62,793,000,000, the Polish trading operation is only 2% of the total revenue, and while it is a separate business segment, it is possible to argue that it is not a major business unit. In this slide, we will look at the presentation of discontinued operations in group income statement. Discontinued operations are presented in the group income statement as a separate line and are shown net of tax. Presentation of business held for sale in group balance sheet. The assets and liabilities of the business held for sale are also presented as separate lines from other assets and liabilities in the balance sheet. The following additional disclosures regarding the business held for sale are required: a description of the non-current assets and liabilities of the business held for sale, a description of the facts and circumstances of the sale and the expected manner and timing of that disposal. In the next slide, we will review how Tesco plc's presentation of discontinued operation and business held for sale in its annual report of 2021. Shown here is the group income statement for Tesco plc. The group income statement shows the profit after tax generated from both continued and discontinued operations. A detailed analysis is shown of the profit after tax from continued operation, which was £721 million. The profit and loss after tax of discontinued operations are represented by a single line in the group income statement, and that is 5,426 million. IFRS 5.33 requires a detailed analysis of the profit after tax from discontinued operations similar to continuous operations to be shown in the notes accompanying the group financial statement. Shown in the notes accompanying the group income statement is a detailed analysis of the profit after tax of the discontinued operation of 5,426 million. A detailed analysis of the trading operations of the 3 disposed business units with a trading after tax profit of 162 million. The profit after tax on the disposal of the Malaysian and Thailand business units, which was completed on 18th of December 2020, which was 5,264 million. This gives a combined total of 5,426 million. It's the 162 million plus the 5,264 million. The Polish business unit, though discontinued in 2021, was disposed on 16th of March 2021 after the financial year end of February 2021. Attached is a summary of Tesco plc's group balance sheet for 2021. if you see there, you see included in a single line under current assets and current liabilities are the assets and liabilities of the Polish business held for sale. As you know, this was disposed of after the financial year end of 16th of March 2021. We'll now review some of the measurement principles of business assets held for sale. Immediately before the initial classification of the assets and liabilities of the disposal group held for sale, the carrying amounts of the individual assets and liabilities shall be measured in accordance with applicable IFRS. After the initial classification, an entity shall measure a non-current asset and a non-current liability or disposal group classified as held for sale at the lower of the carrying amount of the fair value less cost to sell. An impairment loss should be recognized when the fair value less cost to sell is lower than the carrying amount. An entity shall not depreciate or amortize a non-current asset while it is classified as held for sale. Interest and other expenses attributable to the liabilities of a disposal group classified as held for sale should continue to be recognized. Here we show you the disposal account of Tesco when it disposed of its Thailand and Malaysian operation. You will see the disposal account shows the profit or the gain after tax of 5264, and that was arrived at from deducting from the proceeds of the sale, which was 7868, the carrying value of the net asset disposed of 3084. That 3084 is the lower of its carrying value and fair value less cost to sell. Provided here again are the details of the individual carrying value of the net assets disposed of, and what you have to note here is that total of all that is 3084. Now we're going to look at an example of an examination question that was set on ifrs5. This is an exam question set on ifrs5. I have provided the solution in the next slide. Please pause the video here and attempt your own solution. Then go to the next slide and check your answer.